Good morning, IT. This is Dave, aka DREBG. I am a senior member over at informedtrades.com, and for those of you who haven't heard of Informed Trades or haven't been over there, I welcome you to take a look, poke around. There is tons of information. It is all free. You can start your own blog, you can learn a lot, and you can actually earn some money. One of the ways you can do that is by finding trades that other people have found that maybe you didn't see, and look to see if it's something that you want to do with your own account. That is what this video is all about today. There's a trade that I found, and it seemed to make a lot of sense for me, so I decided to plug it into my own system. Somewhere in my travels here on IT, I found a link to another link, and ended up on an article that I really wanted to look more into because it made just such resonation within me that I just decided it was the right thing to do. Here's what I'm talking about. Walker England is a trading instructor over at FXCM, and he wrote this article on June 26 called Euro-Pound Pennant Forms in Downtrend. He starts the article off here just giving some background about where Euro-Pound has been and a little insight as to what the pair is up to. But what really struck me the most was later on in the article where he posted this chart. And this chart spoke volumes to me. Anyone who's a little bit familiar with my trade style, it's based on higher time frames, clean charts, not a lot of indicators, as much as possible. And this type of pattern is a classic one. I had just never seen it. There's so many charts that we can look at, so many pairs. You can't possibly find all the trade setups, and it's nice to know that every once in a while you can pick up a nugget and use it to your advantage. What I did is I took that chart and transferred his analysis into my own charts. This is the quick down and dirty analysis that I ran, put the same chart markings, a little bit of a difference here and there on my own, just to get an idea of if this might be something that I could be interested in. And in fact, that target down below on the right at 77.40, 77.90 area seems about right, but I needed some confirmation. So I took it out to a weekly chart, and you'll see that way back in 2008 on the far left, there's a ton of consolidation back when we were having lots of issues in 2008. And indeed, we have a major support that goes all the way back to that level, which supports our target level. For those of you who might be viewing this in my blog over at informedtrades.com, you'll note that this is a similar chart to what Simit had posted a little earlier today, showing that that support level is pretty significant. Well, this is all well and good, but I decided, this is on July 6th, to actually do a bunch of different screen captures to show how it was that I decided this was a right trade for me and actually expand a little more on what Walker had put out. So let's start over, clear the charts up a bit, back down to a daily. I'll leave the target, the entry, and the stop loss on the chart, and you'll see how that might change a little bit as well. So first things first, you identify a break of a support level. This was back in February, March. And you can see where price action actually breaks, and then what it does is it retests. We retest that support from below, and it's now turned into resistance. If we use where we broke support and where we retested that now resistance level, and we actually chart the rundown that's followed that, this is that channel that we have that supports right where it broke out and also where it retested, and then it follows a nice channel all the way down. Now, I never caught this, but what a great channel that Walker had identified. And if price action were to break this consolidation pennant, maybe we'll see a similar run down as it had when it broke back up here. That would look something like this, where we break support, we retest it, and it's now turned into resistance, and we're left with another run down. All we did was copy the channel before into a channel down here, and that gives us this target level that we had identified originally. Of course, whenever you're shooting for some sort of target, we need to look back and find out, is there any support or resistance that we can tap into? So if we go down to a scrunched up daily chart. You can go back all the way to 2008, and then we look left, we find that there's this area of consolidation where we had lots of problems back in 2008. Well, if we mark that off, we mark that as major support back to 08, we can then go back to our original chart, and we can find that that support line is there, and we can see it, and it matches up just perfectly with that target level. You can even peg a date to this if you like. That target level looks somewhere around August 3rd, which happens to be a Friday, which is non-farm payroll day in August. It's a guesstimate of about how long this trade may take. That's all it is, but certainly it's worth putting in. For those astute traders out there, you may notice way back when I first had this chart up at the very beginning, stop loss is 81.40. Sell stop was going to be 79.80 after the break of this low, with the target down around 77.40. Now, you might have noticed that as we've gone through the charts, that has changed a little bit because we actually entered this trade back on July 2nd. And I entered it manually rather than having the market take me in. In fact, it looks something like this, where we had it down here at 79.80 as a sell stop to take us in the trade as it passed through. But in fact, I decided back here on the 2nd that it seemed like a good way to go because we'd retested and broken back down from that channel pennant. So I decided to take it a little higher, which also changed your money management, right? Because if we change by getting in sooner, we can also change our stop loss and make it a little more tight. I actually lowered the target here a little bit. And again, you're going to see that this is going to change a little more as the trade progresses. To give you a little bit more perspective, this is where the original trade was going to be. And then obviously where we actually entered was a little bit higher. So you have to use your judgment. I read this on the 29th. I saw it on the 28th. I watched it for a few days and decided that it may be a little bit better to enter a little bit higher, which is exactly what ended up happening. So as this progresses, I plan to move this downwards. You'll see this has already happened because obviously we've been in this trade now for quite some time. But this is where I would like to start moving the stop loss down. And what you're left with at the very end is this entire picture. This picture kind of summarizes everything that we've been talking about, where we have our sell order. This is live. Here's the live sell order. The stop loss is above here and the target down here with, of course, an actual risk-to-reward ratio of almost 1 to 2. I'll flash forward just a little bit. This is yesterday, the 9th. You'll see there's a little more price action that's happened. Not much because this is a daily chart, but indeed, there it is before, here it is now. You'll see that I've made a little bit of a change where we've dropped that stop loss down a little bit. And if we take it one step farther, I've also made another change as of this morning. Here's where the trade stands now. We're at plus 130 pips. Stop loss has been moved to minus 60. Now the target has also been moved up, as well as that major support line, this here. If you recall, this was sitting somewhere around 77.40, give or take. I think if we went back, yeah, 77.40, and then our target was 77.30. That was fine, but as I read a little more last night and looked at the trade, I decided to move the stop loss down, move that support level up a little bit because it just seemed to make a little more sense. And right now we're sitting on about plus 130. Trade's moving relatively well, still staying within that channel. So far so good, and we'll keep you updated as to how it moves on. That's pretty much it for now. I welcome any questions or concerns you might have. Please feel free to drop me an email at DREBG@yahoo.com, and we'll see you on the trading floor. Thanks, guys.